the big one here is going to be summer, right? Like I actually think that's the telling kind of indicator for what happens with the OCR going forward. And I think what we're looking at for this one, 25 bips is priced in, but there's an argument that it should be 50.
We are back in your life, and today we are talking about the announcement on Wednesday. What will happen with the OCR? How will we save New Zealand's economy in 2026? Michael, do you think it's a big announcement?
Nah, I don't think it's a big announcement. I think it will be, well, actually, sorry, let me rephrase that. I think the actual cut won't be the big announcement. What people will be watching for is what they say about what's happening next, right? Because, last time was a 50 basis points cut. We all were like, oh, this is so great. 50 basis points. This is life-changing. You know what happened? Absolutely nothing.
It's interesting though, like, because obviously people fix their mortgage. OCR changes, interest rates potentially change depending on what's happening with the banks. Very interesting as well to talk about quite a few of the banks, what they're doing with the cashback side as well. Maybe we'll talk about that at the end of this as well. But if we look at that 50 basis point cut, yes, people are now, there's articles coming out that people have a lot more disposable income, but it's not like rates get cut, it impacts people tomorrow, right?
Yeah, and I don't know how much was passed through by the banks. Didn't seem like a lot, especially on those short-term rates. I think on average, like the 6-month rate moved about 4 basis points or something. So like there wasn't a lot that actually got passed through from the 50 basis point cut. I think it is important to point out though, it's not just the OCR that kind of prices money. Right?
That's what the banks tell you.
Yeah. I mean, there is the demand for money. There's the international swap rates and the overnight swap rates. I just go, feels like there's a lot of margin on some of those rates from the banks, you know?
Okay, well, let's break it down. So obviously, the economy is still shite at the moment. And you go, wow, just drop the OCR, dramatically. There is a reason why there is the do you do it, do you not do it, and it's because of what will happen to inflation. But Michael, we do have a little bit of data since that big 50 basis point cut that happened. Talk us through, what are the numbers telling us?
Yeah, cool. So we did see a short-term spike in inflation, but that was kind of predicted anyway, that was priced in. And a lot of the inflation that we're seeing is from things we can't really control, right? The big one, the gripe that I have is the rates, right? The council rates. For some reason, they just keep hiking them. They need more money. I see that, was it the council that Mahi Drysdale, is that Tauranga? Tauranga, yeah. They just gave themselves a 14% pay rise. Good on you guys. While everyone else doesn't get a pay rise. Rates is a big one. Insurances are a big one as well. I'm a little bit less gripey about the insurance one because the insurance companies aren't making a ton of money at the moment, right? A lot of that is just related to the risk that they are having to take on to insure houses as kind of, extreme weather events become more common. So those are kind of two of the big ones.
Do you know what I thought your gripe was going to be in terms of big increase or expensive things? Raspberries. My boy Cooper loves a raspberry. It's like $10 a punnet. Surely we're getting close enough to summer that we can get raspberry prices to come down. That's what I want to use this platform to talk about.
What do we want? Raspberries. When do we want them? Now. Also strawberries. New World Easters the other day, $25 for a punnet.
No.
Ooh. Yeah.
Oh, you are going to get ripped apart in the comments about where the hell are you shopping. What's that supermarket in LA?
Erewhon?
Yeah. They're going to be like, are you shopping there?
They were good strawberries though.
Yeah. But what is happening to these strawberries?
I did not find those strawberries.
So, overall spending rose 0.2%, which is entirely driven by essentials, which is fuels and groceries. Consumables up 0.8%, fuel up 0.5%.
Just for the everyone, what's a consumable?
I think it's those raspberries, isn't it? No, it's pretty much like groceries is like the big thing. And then everything else fell. So apparel, 0.6% drop. I mean, Mike, you must be holding just yourself, holding opening up the apparel
It's
market.
expensive to look this cheap, James.
Motor vehicles down 1.2%. The poor sleazy car salesman, they're doing tough. And hospo, which I think hospo is an interesting one because if you're feeling better, you're probably going to go out for that extra drink, go out for dinner or whatever.
Yeah.
That's down 1.4%.
When you're feeling good, you drink out. When you're feeling bad, you drink at home, right?
Hopefully when you drink at home, though, you're still with a friend because don't drink at home by yourself.
Life lessons with James Blair. Yeah. I mean, at the end of the day, right, we've seen interest rates that were right up here and they keep coming down. And we're at the point now where everyone starts to get a little bit of disposable income. I don't think there's a lot out there. I think people are still really hesitant to spend. And I think that the economy's still feeling that. Right. And it's going to take a long time if we keep spending at this rate for any kind of, I don't know, additional kind of surplus funds to trickle back into businesses. People don't want to spend at the moment.
The hangover as well of high interest rates. I mean, essentially the RBNZ's formula is pretty straightforward. Lower rates, rolling off higher mortgages onto lower mortgages means extra cash, which equals extra spending. There might be a little bit of extra cash, but it hasn't really resulted in any extra spending yet. But Mike, I mean, we've talked about it 1,000 times, going from a 7% interest rate to now probably a 4.5% interest rate on a $1 million mortgage. We're talking about $35,000 a year. That's $3,000 a month of cash flow to go and do things with. But people, do you feel I feel like a lot of people go yep, I'm feeling a little bit better, but I just want to make sure that I have my emergency fund, save a little bit of cash. They're a bit worried after going through the last few years that, they want to set themselves up.
I just feel like everyone's been beaten up over the last couple of years, right?
Hey,
everyone's like, you know what? I've taken a lot of body blows, man. Let me just get my breath back before I go and do anything. That's the general sentiment I'm getting.
I'm just a guy who wants a strawberry.
I mean, the big one here is going to be summer, right? I actually think that's the telling kind of indicator for what happens with the OCR going forward. And I think what we're looking at for this one, 25 bips is priced in, but there is an argument that it should be 50, and we're going to get into that argument after the break.
Michael, I hear the bank's doing some wild stuff at the moment in terms of cashback.
Wild. Yeah, they are. Look, so ANZ came out the other day, 1.5% cashback capped at 30 grand on all new lending. That is a lot. We are now seeing the other banks starting to match that. So you do have your pick of banks and they will give you a reasonable cashback. Of course, T's and C's apply. If you want to find out what's the best bank for you, whether you qualify for the cashback or how refinance works, get in touch with the team with Lighthouse Mortgages. Now, back to the episode.
All right, Michael, so let's get to the point. What is going to happen on Wednesday?
Look, the head says 25, the heart says 50. I would love a 50 basis point cut. The reason I would love a 50 basis point cut, I think the economy is in much worse shape than the data suggests. I think there's a lack of confidence out there. And I think we need to get into stimulus territory to boost everyone's confidence.
So there's a few things I wonder, Mike. The first bit is if we're talking about doing a 25 basis point cut in November, 25 basis point cut in February, why not just get on with it, do the 50 to stimulate? Because we've kind of stuffed around way too much to this point. But the secondary thing I wonder is obviously, the OCR has come down a lot, especially if we're going another 25 basis now. Is there just a lag? And do we risk, while the data says right now that nobody's spending more money, as people continue to come onto these interest rates into the lower fours, are we creating an inflationary problem?
Lag schmag. People are rolling on 1 year and 6 months terms. It's trickling through pretty quickly. The majority of the book in New Zealand is not fixed on a 4, 5, 3 year, 2 year term at the moment. So I think the lag factor, maybe a bit of a cop out. Just saying there's going to be from the RBNZ, there's lag. Yeah, there's a little bit, but
if we're talking about 6 weeks ago, there was a 50 basis point. I mean, it's still
none of it was passed through. It wasn't even really passed through by the banks. And again, I know it's pricing and all that stuff, but I didn't see any rate drops 50 basis points. Maybe I'm wrong. Maybe one bank did drop. I think Co-op is the only one that passed that through fully. And that was on a floating rate. No one in New Zealand floats. There's one bank that's fully passed it through. Everyone else is trying to hang on to that margin. And even Co-op passed it through on their floating rate. They didn't pass it, I didn't see 50 basis points she get shaved off any fixed interest rates. So, again, man, yep, there was a 50 basis point drop. that's just a signal. Nothing actually happened really in the market that was parallel to that 50 basis points.
Maybe the banks aren't passing on all of the rate because they're worried about the inflationary pressure to New Zealand. And they're like, it's better for us to have some more profit and we can spend the money than give it to Kiwis and create an inflationary issue.
Maybe. I think so. The other thing that I want to talk about here is summer, right? I love a little bit of summer. You know, I love some sunshine.
I can't wait till we hit the beach.
I know it's going to be good. I think really with inflation in New Zealand, we know there's going to be a little lift over Christmas and summer. If we have a miserable summer and it rains the whole time, like it has in previous years, I think that card data stays real low. That spend data, that transactional data. I don't think we have any inflation problem at that point. If it is an absolute cracker, then I think we might get some spending. I think we get a cracker summer and we get 50 basis points off. Everyone is feeling a lot better going into winter. It's a much nicer place to be in this country.
So if I was to summarize your analysis here, one business that I know particularly like absolutely cracks when the weather is good, Movenpick at Mission Bay. It is all based on whether it cracks or not. So if Movenpick in Mission Bay has an absolutely cracking summer, the economy's on.
Yeah.
Watch the line at Movenpick Mission Bay to work out what's happening to New Zealand's economy.
Honestly, Mission Bay just flummoxes me out. I don't get it. I don't get Mission Bay. Like, it's so tacky.
We do have a national audience, Michael. So let's not just focus on. I do agree though. Compared to Christchurch or city centre, even Invercargill, I was down there a few days ago. They've got a brand new city centre.
I love Christchurch. I absolutely no. Don't look at me like that, Emily. I love Christchurch. It is like. And here's my other thing about the South Island going really well, while the North Island's struggling. Like, Queenstown, Christchurch, parts of South Island, like absolutely going for it. Wellington, not going so great. Auckland, could be better. I think it's the infrastructure. Christchurch got to rebuild their entire city after the earthquakes, right? And, not a great reason to rebuild, but it was a reason to rebuild. They have really good infrastructure, really easy to get around, dead flat, great place to live. Queenstown, they get to build their infrastructure, right? They got some issues around traffic and that sort of stuff. But I think that is one of the key reasons why people move to an area and are productive in an area. Auckland's infrastructure sucks. Wellington, even worse.
We got to go do another roadie. We're going to go down, I'd love to do another roadie in Christchurch. So if you want us to come to Christchurch or actually in your city, get us 3 places to come and speak to, 3 businesses or whatever.
Yeah.
We'll go down for a little roadie, won't we?
Yeah, can I got PTSD from Queenstown. I was on a walk last week, a 4-day hike, and my knees still won't bend.
They're swole. You looking swole. Those
yeah, my
knees are swole.
Yeah.
Anyway, let's get back to it. So there are pros of 25 basis point being a little bit more conservative. 50 basis point. Nobody's spending any money right now. Let's make 2026 better. Get on with the show right here, right now, Michael. What are you calling?
Well, if I want to be right, it's 25 basis points.
Because they're scaredy cats.
Yeah, they're scaredy cats. Oh, look, man, I'm sure they're much smarter than I am. I want it to be 50. Get the cuts done, get it in place. Once we get 50 basis points down, let's just leave it there for a while. Let's just let everyone roll onto those rates. Let's let the economy kind of get back into it. The quicker we get there, the better.
I just want to get cracking in 2026, eh?
Yeah.
I'm sick of all this. Yes, and for sure, positive mindset, you're in control of your own future, blah, blah, blah. But a little bit of a win. Have you run into the wind before? It's harder. You want the wind at your back.
I walked into the wind for a day on my hike, and honestly, it sucks.
Knees first. Yeah. Cool. All right. Well, let us know in the comments. Do you think it'll be 25 or 50? We will find out on Wednesday. For all the cricket fans out there, happy Ashes series. We'll wrap it up there. Please make sure to subscribe to the channel. Give us a review. Give us a like. Mike, Australia or England? Who are you calling?
Oh, God. Unfortunately, it's going to be Australia. Although you do have 2 of your good bowlers out.
Let's go. Catch you next time.
Cheers.